Good afternoon, students. Today we will start our third module regarding the open course fundamentals of accounting ledger. So, in the previous class we discussed with the what is a journal, isn't it? Ledger. So, after passing the journal entries, it is according to the nature of the transaction, whether if it is a cash purchase, all the cash purchase will be going towards where? In that ledger account, means cash account. All the purchases will be, or all the purchase in the sense means either credit or cash purchase comes in the purchase account. Like the same, according to the resemblance or the nature of the transaction occurred, it is to be dealt with the several accounts. That several accounts is called accounts prepared is called the ledger. So from the journal prepared, suppose for example, purchases account ledger to cash. This is what purchased goods for cash. So purchases account debit side to cash. This is the one journal, one ledger. So two accounts will get affected. One is the purchase account and other one is the cash account. And the cash account credit side by purchases. See, in this way, we are passing the journalizing the transactions and then pass into ledger accounts. That passing of it into ledger accounts is called posting. So we will deal with this today. So I'm going to share with you the thing. What is that? The ledger accounts. So listen, ledger, meaning of a ledger. A ledger is a collection of all the accounts debited or credited in the general journal or various special journals. So the meaning of ledger. A ledger is a collection of all the accounts debited or credited in the general journal or various special journals. It is the principal or main book of an accounting system. It is the main book as it contains a summarized record of all the transactions of the period. A ledger is usually in the form of a bound register. Then it may be also be in the form of the cards or separate sheets maintained in a loose leaf binder. In this ledger, each account is opened preferably on a separate page. Maybe this purchase account on page number 1, cash account on page number 2, or something like 5, because too much purchase is there for the transaction or for the business. Then maybe some pages have to be allotted. But page wise ആണ് എന്ത് ചെയ്യുന്നത് ledger. അപ്പൊ അതിനകത്ത് അതിന്റെ ഫോം എന്ന് പറഞ്ഞ ഇതാണ്. See, listen here. This is the amount column. So date, particulars, journal folio, amount. Then date, particulars, journal folio, amount. So this is the format for a ledger. So suppose purchase account is there, to cash amount is there, isn't it? In easy way, this is to be writing what is that? Drawing in this way. But the original format is this: date, particulars, journal folio, amount. Means you see in the journal there is ledger folio column, isn't it? Ledger folio അവിടെ കണ്ടതാണല്ലോ, അതിനകത്ത് നിങ്ങൾ കണ്ടതാണ് അല്ലേ? അതായത് ledger ജേണലില് ledger folio column, ledgerല് journal folio column for comparison to be done. അതായത് ഇപ്പം നമ്മൾ ഇത് എഴുതുകയാണെങ്കിൽ ഇതിന്റെ ഈ ഒരു ട്രാൻസാക്ഷൻ നടക്കുന്നത് ലെഡ്ജർ ജേണൽ ഫോളിയോയിലെ ഏത് പേജാണ്, ഇതിന്റെ ആ ഒരു ഇതാണ് ഇവിടെ വരുന്നത്. സോ ദാറ്റ് ഈസ് വൈ ജേണൽ ഫോളിയോ കോളം. സോ പർച്ചേസ് അക്കൗണ്ട് ജേണൽ ഫോളിയോ മേ ബി 6th page is there. So to purchases, to cash 6 in case of purchase. So that is the case with regard to. So it is a collection of all the accounts debited or credited in the general journal or various special journals. It is the principal or main book of an accounting system, and it is the main book as it contains a summarized record of all the transactions of the period. Then, what is the utility with regard to? What is the usage with regard to this? A ledger is the most important book of an organization. As the various transactions pertaining to an account are recorded on one page of the ledger, a clear idea about the net result of a group of transactions can be obtained from the ledger at a glance. So, maybe the ledger account is to be prepared, purchase account, debit side to cash is there, isn't it? Then credit also some items are there coming, isn't it? Goods returned okay, isn't it? So, that's utility, usage. As the various transactions pertaining to an account, suppose purchases, debit and credit side is there, and balancing is to be done. So, on one page of the ledger, debit, as the various transactions pertaining to an account are recorded on one page of the ledger, a clear idea about the net result of the group of transactions can be obtained from the ledger at a glance. The amount due from a customer or the amount due to a supplier can be ascertained at any time from the ledger. അതായത് സപ്ലയർക്ക് കൊടുക്കാനുള്ളതും കസ്റ്റമറിൽ നിന്ന് കിട്ടാനുള്ളതും ഒരേ സമയത്ത് നമുക്ക് ഐഡന്റിഫൈ ചെയ്യാം. കാര്യം എന്താണ്? On both the sides we are recording the things. Then format. Traditionally, ledger accounts are prepared in the form of a T form. See, this is the debit side, this is the credit side, this is the account name. So that is the T form. See, T, debit side. Left side is the debit side and the right side is the credit side. All the debits are to be recorded on the left side and all the credits are to be on the right side. In practice, each side of the account has 4 columns to record necessary details of each transaction. Then the format is in this way. See the screen. See, this is the account, date, particulars, journal folio, amount on the debit side. Like the same debit credit side, date, particulars, journal folio, amount. Difference between the book of original entry and ledger. So the which is the book of original entry? That is the journal. Because we are starting from where? The journal. Journalizing the transaction. Then that is to be transferred to ledger. So we will check into that. Books of original entry and ledger, what are the differences? Books of original entry is the book in which transactions are recorded originally or for the first time. It is a book of first entry or prime entry. So book of original entry is the same as book of prime entry, where it is at the first instance this transaction is to be recorded. So book of original entry is the book in which transactions are recorded originally or for the first time. While ledger, it is the book to which entries in the books of original entry are transferred to be posted. It is a book of secondary entry or second entry. So ledger is the book of second entry or secondary entry, while the books of primary entry is which one? Book of original entry or journal. Then in case of books of original entry, transactions are recorded in a chronological order. On the basis of the date and the time occur, transactions are recorded. While in it, transactions are recorded in an analytical order. So means firstly, purchase account is prepared. Whatever the transaction from the first step. Suppose cash account attached to sales. So cash account debit side to sales. Sales account credit side by cash. If you transaction cash account attached to sales. So purchase account preparing, cash account preparing, sales account preparing. So that is, it is in an analytical order. This is to be recorded. It gives supporting evidence to the entries in ledger accounts. It gives supporting evidence to the entries in ledger accounts. Means from the book of original entry, the secondary entry, book of secondary entry or the ledger is prepared, isn't it? So prime entry book, that is journal entry, that is journalizing, adinana book of original secondary entry undagunathu. So supporting evidence to the entries in the ledger accounts, while it gives the correct information about each item or the person, which leads to the preparation of trial balance. Upon ഈ balances എല്ലാം കൂടെ നമ്മൾ എടുക്കുന്നു, ledger accounts എല്ലാം കൂടെ നമ്മൾ prepare ചെയ്യുന്നു. Then we are finalizing it by balancing it. After balancing it, based on the balances occurred, we are preparing the trial balance. Balances of the ledger accounts are called trial balance. So that is correct information about each item or the person that leads to the preparation of trial balance. Then Balancing is not done in the books of original entry because this is only journal preparation, isn't it? While all the ledger accounts are balanced. ഇങ്ങനെ prepare ചെയ്യുന്ന എല്ലാ അക്കൗണ്ട്സും എന്ത് ചെയ്യണം? ബാലൻസ് ചെയ്യണം. അതായത് ഡെബിറ്റ് സൈഡും ക്രെഡിറ്റ് സൈഡും whichever is higher, then the other side is having the balance. If the credit side is high, there is a balance in debit side. If the debit side is high, there is a balance in credit side. Or some of the items based on the debit balances will be there. Sure, there will be debit balances, and sure, there will be credit balances. So that is the case. Balancing is not done in the books of original entry while all the ledger accounts are balanced, and the process of recording this thing in the book of original entry, the process that is called journalizing, and the process of recording in ledger is called the posting. അപ്പം journalizing എന്ന് പറഞ്ഞാൽ journal entry എഴുതുന്നതിനാണ് journalizing എന്ന് പറയുന്നത്. Based on the time and date of its occurrence, means in a chronological order. While this in the analytical order, and this are to be posted from journal to the ledger. So these are the differences between a book of original entry and a ledger. Then classification of ledger accounts. Next term. Ledger accounts, as we have seen earlier, are classified into 5 categories. That is assets, liabilities, capital, revenue, and expenditure. So asset item, liability item, capital item, revenue item, and expenditure item. So this is, you need to note down. That is one. What is that? Asset item. Asset accounts ഉണ്ടല്ലോ അതാണ്. Then liability accounts. Then capital item. Then revenue. വരുമാനം ഉണ്ടാകുന്ന സെയിൽസ് ഇതൊക്കെ. Okay. Then expenditure. അങ്ങനെ ഇത്രയുമായിട്ട് തരംതിരിച്ചിരിക്കുകയാണ് ഏത് classification of ledger account. So whatever be the asset account is to be prepared. Whatever be the liability account has to be prepared. Share capital, this is the capital. Revenue, that is items of revenue generation. Rent received, sales, then commission received, like that is revenue. Then and items of expenditure, expenses. So ledger accounts, as we have been seen earlier, are classified into 5 categories, namely assets, liabilities, capital, revenue, and expenditure. These accounts can further be grouped into permanent accounts and temporary accounts. Accounts of assets, liabilities, and capital are permanent accounts and are carried forward to the next accounting year, while income and expenditure, that is temporary only for the particular period. Our particular period like the revenue and the expenditure, the expenses incurred. Then accounts of income and expenditure are temporary accounts and are closed at the end of the accounting period on preparing the trading and profit and loss account. Another account, trading and the profit and loss account and the balance sheet. So profit and loss account to ascertain the net profit or net loss, net profit of the business, and all permanent accounts will appear in the balance sheet. That is the statement of assets, liabilities, and the capital. From balance sheet, assets, asset this side, liability and capital on the left hand side. This is classification of accounts. Then posting. The process of transferring the entries from books of original entry to the ledger is called the posting. Purchase account letter to cash. എന്താണ് posting? Purchase account debit side to cash എന്ന് എഴുതുന്നതും cash account credit side debit credit ഏതാണ് ഐഡന്റിഫൈ ആയിരിക്കണം ആദ്യം. So cash account credit side by purchases എഴുതുന്നതും ആ ഒരു പ്രൊസീജിയർ ആണ് എന്തെന്ന് പറയുന്നത്, that is the posting. It is the bringing together of all the transactions in respect of one particular account at one place for further accounting process. അപ്പം ഒരു ട്രാൻസാക്ഷൻ മാത്രമല്ല വരുന്നത്, പർച്ചേസ് അക്കൗണ്ടിൽ പല ട്രാൻസാക്ഷൻ വരും. ഒരു മന്തിൽ പർച്ചേസ് അക്കൗണ്ടിൽ ഇഷ്ടംപോലെ ട്രാൻസാക്ഷൻ വരും. എന്നിട്ട് ഡെബിറ്റ് സൈഡ് വേഴ്സസ് ക്രെഡിറ്റ് സൈഡ് ചെക്ക് ഇറ്റ്. ഇഫ് ദ ക്രെഡിറ്റ് സൈഡ് ഈസ് എക്സീഡിംഗ് the debit side, then there should be a balance in the debit side, like that. So that is why posting is to be done. So it is bringing together all the transactions in respect of one particular account at one place for further accounting process. A journal entry consists of 2 aspects, debit aspect and credit aspect. Each aspect is an account itself. Debit aspect is said to be debited and the credit aspect is said to be credited. For example, when cash is received from a person, so cash is received from a person. So cash account debtor to personal account. ആരാണ് വ്യക്തി? Suppose X is the person, X account. So cash is received from a person, cash account is debited. So how it is to be? Cash account debit side to X, X account credit side by cash. ഇതാണ് ആ procedure എന്ന് പറയുന്നത്, posting എന്ന് പറയുന്നത്. So for example, when cash is received from a person, cash account is debited and the person's account is credited in the journal, isn't it? In the ledger, an entry is made on the debit side of the cash account and a corresponding entry is made on the credit side of the particular person's account. So cash account debit to X, so to X and by cash accordingly. So following are the steps in posting. Check it this. Posting the debit aspect of a journal entry. Turn to the particular account in the ledger that is to be debited. For example, turn to the particular account in the ledger. For example, cash account debit to X. So, which is the account? Cash account is the debit aspect and X is the credit aspect. So, in the cash account, debit side to X. So, record on the debit side of the account the date in the date column. Record on the debit side the other aspect of the transaction involved in the particulars column. Enter the page number of the journal folio column and record the debit amount in the amount column of the account in the debit side. See, suppose 1000 is received, cash account to X 1000, and also the credit aspect on the other case. So, credit aspect of the journal entry may be posted to the credit side of that account in the same manner, like X account by cash. So, cash account debit side to X, X account credit side by cash, procedure posting in the പറയുന്നത്. And also to and by are need to use. The word to is used with the accounts which appear on the debit side of the ledger account, and the word by is used for accounts which appear on the credit side of the ledger account. Then following is an example to make the process of the posting clear. Bought furniture for rupees 3000. So for example, we will do one small example with this. Bought furniture for rupees 3000 on 15th March 2003. So what is the entry? Furniture account debtor to cash. So furniture account debit side, two accounts it gets affected, isn't it? Furniture account, how much is the amount? 3000. Furniture account debit side to cash, that is 3000, isn't it? If you are preparing in this, see, in this way you need to prepare in the original. Here the date, here the particulars, then there is the journal folio, then there is the amount, date, particulars, journal folio, amount, isn't it? So furniture account debtor to cash, and at the same time cash account also get affected. How it is to be? By furniture, how much? 3000. So see, this is the aspect posting. Furniture account debit side to cash, cash account credit side by furniture. Idana posting to the ledger account konda uddeshikkunnu. And balancing of the accounts. Posting in session, balancing. Balancing of the accounts is the process of ascertaining the difference between total of the debit side and total of the credit side and inserting the difference on the side where the amount is less in order to make the totals matching. Debit side and credit side രണ്ടിന്റെ total എടുക്കുക, ഏത് സൈഡ് ആണ് കൂടുതൽ അതിന്റെ ഓപ്പോസിറ്റ് സൈഡിൽ to balance carry down വെക്കുക, then we are matching this one. Suppose ഇവിടെ ഒരു 15000 ഉണ്ട്, അപ്പം എത്രയാണ് ഡിഫറൻസ്? 12000ന്റെ ഷോർട്ടേജ് ഉണ്ട്. So to balance carry down 12000 എന്നുള്ള രീതിയിൽ എഴുതുക. Then so balancing of account is the process of ascertaining the difference between the total of the debit side and the credit side of the account and inserting the difference on the side where amount is less in order to make the totals of the account equal. Accounts in the ledger are periodically balanced. Generally, it is done at the end of the accounting year. The words balance carried down are written against the amount of difference between the two sides. The amount of balance is brought down to the next accounting year also. So to balance carry down this one and to the next year it is brought down. In case the debit side exceeds the credit side, the difference is written on the credit side of the account as by balance carry down. And in such a case, the account is said to have a debit balance. That means debit side is more. In the credit side, if the credit side exceeds the debit side, difference is written on the debit side to balance carried out. In such a case, the account is said to have credit balances, which implies that the credit side of the account is more. കൂടുതലാണ്. അപ്പോൾ അത് നമ്മൾക്ക് ഇതൊക്കെ നമ്മൾ പ്രോബ്ലം ചെയ്യുമ്പോൾ മനസ്സിലാകും. Then posting and balancing are illustrated through a cash account. So I will explain to you how it is to be. What are the entries there? Can you see the screen? The entries are, one is cash account debtor to capital, furniture account debtor to cash, and purchase account debtor to cash. So we are preparing the cash account. See the T4. This is the amount column. So this is the amount column. This is the journal folio column. Then particulars column and then date column. Here the date is something like that. Date, particulars, then journal folio, amount. So listen. Here, first case is what? Cash account debtor to capital. We are preparing the cash account on 1st March. March 1st, cash account debtor to capital. So, to how much? Capital account. To capital account or the capital account. How much is the amount? 10,000. Next transaction, which day? Third, furniture account debtor to cash. So, on the credit side, because what is the posting? At the time of posting, you need to see what is the furniture account debit side to cash, cash in the credit side buy furniture. Debit credit or debit credit. So here, which day it is? 3 buy furniture. How much is the amount? 4,000. Then next transaction is purchase account debtor to cash. So here only cash account for your I need to show you how it is to be balanced. So purchase account debtor to cash. Purchase account debtor to cash on which day? It is 6 by purchases. So how much? It is 5,000. See that this one. On the debit side, there is a 10,000 total, and on the credit side, there is a 5,000 and 9,000 total. So which side is more? Sure, debit side is more. So we are going to total it up. So 10,000. Here also 10,000. What is this one? At the next day or at the month end, by, because this side nothing to come here more. By balance carried down, that is this 1,000. By balance carried down this 1,000. That is to be brought forward to the next accounting day. That is 8. Suppose if it is the next accounting day, that is to be brought forward to balance brought down 1,000. See, this is posting and then balancing. This thing is called posting and balancing. Clear? So cash account to capital account 10,000, buy furniture 4,000, buy purchases 5,000. Take the difference between these two columns. Debit side is higher than credit side. So there will be a balance in credit side. So by balance carried out, that is to be brought down to balance brought down. Clear? So this is the case with regard to balance posting and then balancing. In continuation with that, following is the extract of page number 21 of Rajivan's journal, where prepare journal and ledger accounts. That is, see, this is a normal transaction. TG account debtor to sales account, purchase account debtor to Joy account. Then next is what? Cash account debtor to sales, cash account debtor to TG, Joy account debtor to cash, sales returns account debtor to TG, Joy account debtor to purchase returns, furniture account debtor to cash, and salary account debtor to cash, and cash account debtor to commission. From this, we are going to prepare, or I will show you how to prepare several accounts. See, at a stretch, we will prepare several accounts. And some of the accounts having only one or two transactions and some having more. So what we need to do, we will put the more transaction account, a big one we will prepare, and a small one for the small transaction to be. So here, TG is having more. So TG's account, one is this. Then purchases account, purchase account. Then what is the next? Sales account also, a big one, because too many transactions maybe. Okay. Then, so first entry, TG account data to sales. So to sales, see the transaction to sales account, how much it is? 8,000. Then sales account endana by TG, that is 8,000. Sales account by TG 8,000. Then, so first transaction, look, TG's account debit side to sales and sales account credit side by TG. Next, purchases account data to Joey's account. So here I am going to prepare another account, Joey account. Because due to the size of the board, this is very, in the college, this big board, then not a problem. But here it is too tedious. So purchase account to Joey, how much? 6,000. And buy purchases 6,000. Isn't it? Then next transaction, cash account debtor to sales. So another account, cash. Cash account debtor to sales, how much it is? 5,000. See, in the, can you see the screen here? See, this is the journal folio. That is, cash account is the 14th page of the journal and sales account is the 11th page of the journal. And at the time of entering this thing there, the ledger folio page we are putting. So that is, for easy way, I am doing it this because I need to explain it to you. So first entry is TG debtor to sales. So TG's account debtor to sales and sales account by TG. Then second entry, purchase account debtor to Joey. So purchase account to Joey 6,000 and buy purchases 6,000. Third, cash account debtor to sales is 5,000 and here buy cash 5,000. Then cash account debtor to TG, one more transaction. So how much? TG, it is 5,500. And TG's account, so buy cash 5,500, because whatever the transaction, this, see this transaction, cash account debtor to TG in the debit side of the cash and in the credit side of the TG buy cash. Then cash account debtor to TG, then Joey account debtor to cash. So Joey, where is Joey? Here, to cash, how much it is? 4,000. Then what is the entry? Joey account debtor to cash. So here buy Joey. How much? 4,000. Isn't it? Then sales returns account debtor to TG. One more account, sales returns. Sales returns account debtor to TG. How much it is? 300 is returned back. So TG's account, what is that? Buy sales return 300. Then Joey account debtor to purchase returns. Purchase returns. So what is that? Joey debtor to purchase returns. So to purchase returns, how much it is? 200. And purchase returns account debtor by by Joey, that is 200. Then another account, furniture account debtor to cash. So here I will write furniture to cash. How much it is? 3,000. And buy furniture account debtor to cash. So buy furniture 3,000. And salary account debtor to cash. Here also one more account we need to prepare. Salary to cash. How much? 400. And buy salary 400. Then cash account debtor to commission. So here another account I am preparing, commission. So what is that? Received commission. So cash account to commission. How much it is? 100. And commission account by cash. So which all account is by cash? 100. See, which all account we need to prepare or give more emphasis. One is TG, another one is cash, like that. Clear? So see, these are the posting and posting done. Now need to balance it. So here TG's account, starting with TG. 8,000 is the debit balance and 5,500 plus 300. 5,800 is the credit balance. So there will be what? Credit balance of by balance carried down. How much it is? 2,200. So 8,000, 8,000. That is to be brought down. To balance brought down 2,200. So see, all the transactions are over now. And then after that, we need to balance it. So after the posting, balancing is done. So next, purchase account debtor to Joy. So buy balance carried down 6,000. So to balance brought down 6,000. Then here April 5, 13. 13,000 is the total. So to balance carried down 13,000. So that 13,000 is to be by balance brought down. Okay. Then next cash. Cash account to sales 5,000, to TG 5,500, to cash 100. And credit side by Joy 4,000, by furniture 3,000, and by sales 400. How much? 7,400. Then cash 5,000 plus 5,500 plus 100. 5,600 plus 5,000, 11,000. How much it is? 11,600 minus 7,400. See, sales 13,000, then purchase account 6,000. No need of putting the balance like that as it is. Need to take it from here to the trial balance. Then next is cash account. Cash letter 10. Okay, 10,600. 10,600 minus 7,400, it is 3,200. So 3,200, that is by balance carried down. So 10,600, then 3,200 to balance brought down. Then cash account, then Joy's account. How much? 4,200 in the debit side and 6,000 in the credit side. So to balance carried down, how much it is? Joy 1,800. So 6,000 is the total. So 1,800, isn't it? Then what is the next account? Purchase return. So to purchase return, I think as it is, because there is no more balances. Sales return also no more balance. As it is, we need to take it from here to trial balance. Salary account as it is, because only one transaction. Furniture account also as it is. Then so furniture account, this is an asset item, it should be tallied. So by balance carried down 3,000. So to balance brought down 3,000. Clear? Then like the same, salary account, no need to be balancing. Commission account, that is also no need to be balancing. And then finally, you have seen that the accounts are prepared from a journal, and look at the following accounts of Mr. Trom and try to state the rated journal entry. So this is the case. Look, we prepare from that entries, journal entries, we prepare several accounts. Look, how many accounts? TG's account, purchase account, sales returns account, furniture account, salary account, cash account, purchase returns account, commission account, and Joey's account. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 accounts we prepare. So this is called balancing, posting and balancing the ledger accounts. Clear? So this is called posting and balancing the ledger accounts. അതായത് ജേർണൽ എൻട്രി എഴുതിയതിന് ഡെബിറ്റ് ആസ്പെക്റ്റും ക്രെഡിറ്റ് ആസ്പെക്റ്റും എടുത്ത് അതിൻ്റെതായ രീതിയിൽ അതിനെ പോസ്റ്റ് ചെയ്യുന്നു ആൻഡ് ദെൻ ബാലൻസ് ചെയ്യുന്നു. അതാണ് ലെഡ്ജറിനകത്ത് ചെയ്യുന്ന വർക്ക്. ആ വർക്കിനാണ് പോസ്റ്റിംഗ് എന്ന് പറഞ്ഞത്. ട്രാൻസ്ഫറിംഗ് ഫ്രം ദ ജേർണൽ എൻട്രി or transferring from the entries prepared to several accounts. Here see what all TG's related account all coming in TG's books. Purchases account all coming in there. Sales account all coming in there. Cash account also like the same coming there. See, entire transaction relating to cash. Now the available cash balance is how much? 3,200. See, so this is the case with regard to posting and balancing the ledger accounts. We will see the balance portions in the next class. Please have a look at today's topics. This is a new one. New topic means from the journal to the ledger, how this is to be done. Posting and balancing. So please have a look. Please clear the doubts as and when occur. Please see the video once uploaded and then reply to me that I saw the video. Thank you for the day.